right, I can do that. Hey, everybody. I'm going to leave this up at the beginning here, particularly for John Croissant. And that way, when he signs in, he can always go back to the beginning. I'll just reread, if I can find it quickly, the theory behind this chart. This is a chart I made. However, it's based on Mike Maloney's strict guideline. So Mike Maloney writes, I rely on the gold-silver ratio to tell me what to do. And this is the point of when you decide, should I buy gold or should I be buying silver? And I let the ratio tell me what to do. I dutifully obey. What is the gold-silver ratio? It's simply how many ounces of silver it takes to buy 1 ounce of gold. It's easy to calculate. Just take the price of an ounce of gold and divide it by the price of an ounce of silver. So, in his example, if gold is trading at 2,000, don't you wish? An ounce, and silver is trading at 25, don't you wish? An ounce, then the gold-silver ratio is 80. This graph has been my guide, making it obvious when one metal is underpriced compared to the other. When the gold-silver ratio is under 50, in other words, when 1 ounce of gold buys 50 ounces or less or fewer of silver, it suggests gold is undervalued compared to silver, so I buy only gold. When the ratio is between 50 and 60, I split it 75%, 25% gold-silver, and you can see that there. And when it's between 60 and 70, the gold-silver ratio, I split it 50-50, and you can see it there. And when the ratio is between 70 and 80, 75% of my currency, my fiat currency, my dollars, go to silver and 25 to gold. And when the ratio is over 80, I buy only silver. So that's that ratio. And I think I think that's up enough so John can see it, and maybe make a copy of it. Let me see if I can take it down. I had it the other day when he asked. I just didn't find it. Lot going on. I unfortunately haven't listened to Junk's calls. Junk Savvy and Busy Brand and Curtis and others. God, I can see the pictures, hear their voices, but I don't know. I hope I don't have a Biden brain coming on. But I don't know. What do you do to prevent it? Last night I went to a movie. There was only one seat left in the theater. It's not a big theater, called Mickey 18 or something. And the only seat was in the middle of the middle row. It was right in the middle. And I had no idea, but I figured it's sold out. It'll be a good movie. That was the worst movie I've ever seen. But I'll tell you what, the younger generation, they were all wrapped in their attention to it. It was just absolutely drivel, horrible. But next to me was this enormous human being. This woman sat down young, but man, just a whole different size than I was. And there was no way I was going to be able to climb over her and discreetly leave. And to my other direction, it was all packed, mostly bigger guys. I couldn't leave. I've never been so frustrated since I took a date to Every Which Way But Loose, one of the worst Clint Eastwood movies I've ever seen. But I don't know why I brought that up, other than I was talking about listening to all the space calls, and I guess my mind was racing ahead to how populations act, how people, and I guess I've kind of gotten older than what the current popular theater would be. Maybe it's a change in taste by everybody growing up with video games, but it was a horrible movie. But my point is, it looks like it's popular, and that's investing. You've got to try to suss early what's happening and try to see around the corner, see in the future, and try to get out in the investment before the hype train comes. And that was a bad example, perhaps, but I got the last seat and I wasn't able to, I didn't have any flexibility. I was the only person, I was a good 20, 30 years older than everybody in the audience. But they loved it. The worst part of the movie was when the credits came up, just a black screen with white letters and horrible music. No one laughed. They're all sitting as if, oh, wow. Ugh, horrible. But this is my point is twofold. One is, one of the reasons I get so frustrated, and sometimes I get intemperate, I get short in my responses, because I find, and I've done it in my lifetime, and I'm frustrated just to pick on a stock that I believed in and own, Logic. It drives me crazy. I don't know, I'd have to look, but it's just totally dead money, and I can't trade it. I forgot what price it was, a penny and a half. I am optimistic. I did get good feedback that I'm going to get an update for you. But that's an example. Rather than me picking on other people's choices, I can pick on that one as it relates to me. I have a choice. I can spend my time just going back over and over and over it, and joining a group of people bemoaning it. But after I understand what's gone on, and I have my own view on Logic, which apparently is not correct, according to pretty high up. But once I've done all my thinking, all my research, and I've learned really all there is to learn, I can't do anything. So what does it help to talk about it? Other than answering questions, I think that's fair, and I think it's fair to revisit. I think it's fair to ask for updates, but the deep dive into a stock that's not doing anything takes energy. It takes energy. It gets us off our game. And I picked that one because I don't want to jump on other people's ideas like MMTLP and just spend forever on it, or others. So today's reading, oh God. Make a gesture of reconciliation with someone from whom you are alienated. So I guess maybe that's what I can think of other people, but to the extent that I've alienated you or alienated others, I apologize. I also am trying to explain that the frustration builds up. I understand. In my case, literally, I don't have the capital to put in silver and gold. I just don't have it. Could I have traded GTII or Finger differently, or traded Vocal, or not gotten into MMTLP, or other decisions and other relationships in my life, and be in a different position now? Yes, but I'm not. Fact is, as much as by the way, I'm one of those people that goes back over and over things, and I can get very upset with myself. So I'm not picking on anybody. All right. Why does it frustrate me? And I understand sometimes that's where one's money is. In my case, my money's all, dead. Although I think in my IRA, my emphasis, I guess, on Railtown might give me something pretty soon. But we'll see. We can talk about that. And then those other little two stocks that are trading, I have next to nothing. But if they go up, it gives me something to add Railtown, maybe. But anyway, so why? What's that underlying stress or tension? Because when an opportunity is gone, you got it on Wall Street anyway. You just got to go try to get the next one. You got to go build a position in the next one, or you've got to even sit out a couple rounds and find the next one somehow. The trade of your lifetime, whether you're 70, 60, 50, 40, 30, 20, the trade of your lifetime is silver. Bar none, silver is the trade of your lifetime. And we haven't built up our position. I don't have one. I've wanted one, and I've tried to get, over the years, I've tried to build positions. Silver has gone from, in the last, let's just roughly say decade, from under $15 to $35. That's a hell of a move. Hell of a move. But it's, in more recent times, it's gone from about, lordy, maybe $18, maybe $19 a couple years ago. It's in the charts. I'm not trying to exaggerate. I'm giving you the broad stroke. And it ran up, and then it pulled back down in the 26, 27 range, and now it's moving again. And that's my urgency. That's my frustration. I really got into Finger, GTI, CRTD, so I could see if I could make a trade, clean up some of my bills, of course, but then own silver. And if I go back to this chart, silver right now, gold is over 3,000. When I looked this morning, silver was 30, I think 34, might have been 32. But if you take 3,000, oh, I got to clear that. Let's say 3,050, just because gold might be up a little. Divide it by 34. The ratio on this chart is still basically 90. So if you have money to invest into these new headlines, it's going to be on CNN. It's going to be on the front pages of Teen Magazine. It's going to be on the front pages of, New York Times to People Magazine to TV Guide. And right now, the ratio is 90. So my opinion, you buy silver. And but you can, gold is less volatile. And the question is, have you missed it? No, you haven't missed it. The problem is you're going to be chasing it. Just like, for example, I did with G-Bucks. G-Bucks, I had Ham talked about it for 6, 7, 8 weeks at under $1, 75 cents, 73 cents. I didn't do anything. And then in the span of 1 or 2 weeks, it ran up. And the group think the emotions of a move, and it looked good to me. So I got in at 8. I think that run up and everybody talking about it, Ham talking about it, got me to act because, man, it's going to go. And that's what you're going to feel like with silver and gold, but silver in particular. My opinion, it's just my opinion on silver. Anything under $52 is cheap, and you'll never see it again. I think silver will break out. It'll go one. Look what's happening with $3,000 gold. Everyone's trumpeting it. $50 is the number for silver. Everybody will be talking about it. So I think you can buy up to 50 almost on a set it and forget it strategy. Of course, if gold stays, let's say let's use 3,100, the ratio falls down to 62, and then you're in that 50-50 range. So I wouldn't blame you, or John would recommend maybe platinum. I wouldn't blame you for stretching it out, but right now it's silver at these prices, and I just don't think you have any more time, and it frustrates me that I didn't somehow shepherd all this into profit so that I could have, and I did tell you, I don't write a blog or anything, so there's nothing for you to go check other than my tapes, which that would bore the hell out of me. But I did tell you, but I wish, and I would have told you, had we had a squeeze 2 years ago, 3 years ago, buy silver. I've been a broken record on it. But here it is. About, in my judgment, we're on the last opportunity to buy it under 40, under 50. And it might seem that I'm Johnny come lately, joining in on the headlines. Well, as my dad used to say, life is such. Okay, now gold. Well, let me finish on silver quickly. I think silver, once it breaks out of 50, it's going to double. Does that mean it goes to 90 or goes to 120? Close enough either way. And everyone, including myself, is going to be going, I got to buy it, I got to buy it, I got to buy it, I got to get in it. It's going to 500, it's going to 1,000. You'll see it. I won't even have to tell you. You guys will be typing back to me instead of XRP. You'll be typing back to me PSLV, typing back silver. Silver's going to 10,000. That's what'll happen. But I think simultaneously the stock markets are going to be exploding higher in the last hurrah for a 2-generation bull market. I don't know many of you who've had a relationship in your life longer than, say, 45 years, but you've had plenty, your parents, your family, your wife, your children. But if you start thinking about it, 45 years is a long time. And we've all had a 45-year relationship with this stock market. I remember when I got started, how difficult it was to get clients. Nobody wanted to talk about stocks. It was like daily punishment. Oh, I don't gamble in stocks. I put my money in real estate, which was a good. Everything's gone up for 45 years in dollar terms. But anyway, this rally is going to be the last hurrah. And then I think you're going to have a big correction. And the shorts, the criminals, will make a fortune if they're still around. Because the market is set up so that you have to put up cash to buy. But these cowards that come on here, they don't need cash. They just need an account, a lawyer that checks the boxes for the prime dealer, and then they need a market maker that's fake. And they start with a little kitty that maybe a guy like Steve Cohen provides to them from a distance. But once all the relationships are up, and they become a big client to a market maker, a big client to a stock loan desk, a big client to a prime broker. Almost any order is accepted because it's a big client. It's just automatic commission, and it becomes we never used the word whale. That's out of gambling. But I don't remember what we would call our big clients. It just becomes a big client. And so anyway, when the stock market gets, let's say the Dow gets to 60 or 65,000, when it turns down, these guys will sell stock that doesn't exist on a massive scale. But also you'll start selling if you own stock, mutual fund, not at first. There'll be a buy the dip, but when it breaks, there'll be a panic among all the money managers who are so smart to not be left holding the bag. They're going to want to be able to show their investors, hey, we got out. We're out of all those stocks. Anyway, it'll just feed on itself. And I think the Dow, the NASDAQ, the Russell will. You were scared with 1,000-point drop. I think the Dow could go down 10 grand in a day, and more. And it can open the next day gapping down another 7 grand. It's going to be frightening when it comes. And while the market goes up, it'll be hard for you to believe this little thing I always told my clients. But to me, stocks go down more quickly than they go up because they've already been there. People can perceive, you know, I don't know, a NVIDIA from 140, they can perceive it at 40 because it's already been there. It's harder when NVIDIA's at 140 to perceive it at 200 because it's never been there. That was my rationale. Right now, if I'm correct, and the bond market is the biggest risk to my what I'm saying. If the bond market gives up the ghost, then I'm wrong. When this rally comes in these stocks, you're going to wonder, wow, this is easy. NVIDIA at 200, I can't believe it. And that was easy. That was great. It's going to keep going, and everybody's anyway. It'll be like that theater. Everybody will fill in the seats. They'll stand at this crap. They won't want to leave. But don't get in the theater in the middle seat next to a young person 3 times your size. Sit near the edge, sit near the back so you can exit. Anyway, in that environment, I think silver will go to 90, 100, 120 now, like before September, before January. I don't know the exact time of when this final rally will come. What would do it? I guess the Fed would succumb and lower interest rates, and the market would think, well, we're going to get 3 interest rates cuts, maybe, or maybe Trump wins on some trade agreement, or I don't know what else. Maybe there's a cut, you know, that Doge refund, which I don't get. Why would you save money on the one hand and throw it out again? But maybe that's, anyway, it'll be something we can't predict right now that'll get the market going up. I think silver, let's just say it'll go to 120. Silver's volatile. And gold, I think, is going to go to 4,500, 5,000, and maybe more. You know, the brave men on Wall Street have now increased their target for gold to 3,100 to 3,500. I've been saying it for a while, but I'm not trying to congratulate myself. I'm trying to say that when you see a trend, you got to ride it. And when you're following analysts that are recommending that, you got to stick with them. And that's what I'm trying to distill listening to hours of these guys. And plus, it's something I've studied for a long time. So let's say silver goes to 120, it might only go to 90. You know, it's just gets in the ballpark, and there's this big crash. I think silver will pull back. 2 gentlemen I listened to think silver could come all the way back and touch where it broke out at roughly $26, $24. I don't think so. I don't think it'll come back down there anywhere near that. But I do think silver will come back maybe to 50, give or take. So that's why I'm telling you how urgent it is to own silver, physical silver, or PSLV now, because that roller coaster ride, you're going to feel like a king when it doubles or triples. But then as it pulls back, it's going to make you doubt if you bought it on the way up, if you bought it at 80 or or 100, you're gonna be sick to your stomach, and you're gonna be asking for updates every day and wondering what to do. I think there's strength in owning silver now, so that when it runs up, you could sell some because you're already making money and buy it back. You could hang on to it and ride through the up and down, or you just buy more all the way up as it keeps going. You're always rounding up. And if you bought it now at 35 and you bought it all the way up to 80 and it went a little higher, maybe your average is 40 or 45. It runs to 120, it pulls back to 50. It's gut-wrenchingly scary, but all your cost basis is below where it pulled back. If, on the other hand, you wait to buy until Cathie Wood is telling you to do it, and you buy it at 80 or 90, just in time for it to run to 120, and then it collapses like a son of a bitch, you're going to just feel sick to your stomach. So it gives you power to buy it now. That's the short run. Let's fill in the next months and years in another conversation, but fast forward for a 5-year hold, let's say, end of the decade, beginning of the next decade. There's very conservative targets out there for silver. I think the conservative targets are wrong. They're highly pounceable. I mean, you could see $300, $500 an ounce. That's a great return. But I think silver's headed far above $1,000 an ounce. I think silver is headed to the gold-silver ratio established by the exchequer of the British Empire and that's where you get the pound sterling from, the idea, oh, that's the pound sterling. 15.5, 1 to 15.5. 15.5. And I think that's where it's going. I think it will overshoot that, and it'll go to 1 for 1 with gold. So I think, but that's longer term, and but most of that move will be wealth creation. A lot of that move could be a short squeeze. You've got a massive setup for a short squeeze in silver. You don't have to worry about what the CEO, if the CEO's flattered by the liars at Lynn Partners, or if the CEO goes to a company that is half good, half bad, like Roth Capital, and Roth Capital says, hey, we can raise $25 million for you, and you have no idea if you're the CEO, except you need the money, and Roth Capital, half of that money is going to the criminals that just sold your stock down $1. You don't have to worry about any of that. You don't have to figure out, is this company real? They have AI. They're bringing in a new technology. It's a subscription service. If they charge $5 a month, it's going to be, the company's going to be worth a bazillion. Or this company is coming in with contracts out of Europe for medical, for prescription drugs, and they can source those drugs, and the company is run by a Greek guy, and they've got a great name, and they're not going to do a deal with the shorts, and they're going to change the QSIP number so it should squeeze. It's all crap. It's all, you don't have to worry about any of that. You don't have to figure any of that. There's no figuring out. In the silver market and the gold market, and probably platinum, you just dismiss all those liars. They're all gone. You don't have to listen to any of them. And you don't have to figure out if they're telling the truth or not. And the CEO doesn't have to figure it out. Now, I will say there's been a lot of liars, and there are currently liars in the silver market and the gold market. This, what Wall Street does to these small stocks, they do in every category of asset. This is, in broad stroke, the financialization of an empire. It's the last gasp of an empire. And it's happened in the past. I can't give you anything out of the Bible, but I'm sure it's in there. But it happened to Rome. It happened with France. It happened other places. I don't have anything popping into my head that can give you illustrations. But an empire, apparently Will Durant's epic with his wife would explain it to you. I bought the first of his books 30, 40 years ago. Never read it because I was always working. I wish I had. Maybe that'll be a goal sometime. But anyway, countries start with their human population, their natural resources. They build, they get industrialized. People move from the country to the city. Maybe they become a military power. They sell to the rest of the world. They become a consumer nation. Credit is extended, and the cycle goes up. In our case, we become the reserve currency, and the end is the banksters. The end is the concentration of wealth with a few good men. And that's where we are. The cheating in the silver market happens on a scale that it makes you wonder if I'm telling you cotton candy or if I'm telling you something real. They sell silver in the paper markets. They'll sell 1 or 2 times the annual production of silver. The annual production of silver worldwide, they'll sell 1 or 2 times that in a single, I would guess a single day, but in a single very short period of time. And they get away with it because it's the same reasons. No settlement is enforced. The lending of silver is you Xerox it, you mimeograph it, you lend it once, lend it again, you hypothecate it, big word, and then rehypothecate and rehypothecate. And by the time it's done, who cares? You just hit the sell button. There's costs, but you hit the sell button. And these are, my understanding is there's 27 traders on the paper markets, 26, 27. Young men, hot, energy, testosterone running. I know men and women are the same, and women are powerful, and the future is female. Well, this is one area where women don't tread, because women are different than men. Testosterone does something to men. I don't know what it is, but if you're ever driving, my sister gets mad when I point it out, but if a guy is driving and he's impatient, he'll speed up, cut you off, and then cut somebody off, and he's gone down the road. I kind of admire it. It looks dangerous, but he got it done. And it is dangerous, but he got it done, and he went. A woman, I had a friend that did this in the middle of an intersection, very beautiful woman, in the intersection of a major intersection in London. And we're in her little Volkswagen, and she's turning left. I guess it's right, whatever. Well, it was, yeah, I guess it was right. Anyway, they're on the other side of the road. But she's holding it, and she's looking and clicking, and she's sitting there, and she won't move, and the traffic just moves. And you just got to go. She wouldn't go. She's waiting and waiting. The light changes. And she's a very capable, competent person. very successful on Wall Street. But she just more conservative. She didn't have the testosterone that a man would have. And we sat there and the beeping and the bong and the lorries would come and then we're sitting and it's very uncomfortable. So I kind of admire the testosterone of men. And, you know, I sometimes wonder if women should be allowed to drive, but that's the kind of comment that'll piss my sister off. These 26, 27 men are mostly employed in New York, London, maybe Chicago. They all know each other. And every time silver is up, they short it down. It's the same pattern that you're seeing in everything, single stock. As it runs up, they're losing money, but they can keep selling silver they don't own. They can close out a losing position, start a new one at a higher level, sell it that they don't own. And they do it so they can make massive gains on leverage. And the handicap, although it's a little evened out, the handicap is that we as buyers have to put cash up first. They don't have that restriction. They can sell as much silver as their bullion bank will let them sell. Now, having said that, physical silver and futures is a little different than counterfeiting shares. The problem is it's not that confusing. There's silver, there's selling and buying silver, and then there's the lending of silver, and then there's the futures. And yes, you can manipulate it, and yes, you can get away with it. And when you're losing, you can press your bet with the massive resources of JP Morgan or Merrill Lynch. You can just establish huge positions. Instead of selling half a year's production, why not sell 3 years worth of production and see how the market takes that? And that's what they do. And eventually, even if they book some losses, eventually they start making some gains. And most of the time, they don't carry the positions long, and silver is down, and then people in the investment world get enamored of Bitcoin and XRP, and both of which I like. I don't know the dynamics of Bitcoin in a crash, but I have nothing to say bad about any of that. But money goes elsewhere. Silver looks dead. Gold looks dead. Nvidia's going up. Amazon's going up. Hey, look at Pfizer. It's got 43 cents a quarter dividend. And, you know, everybody's got an idea because silver looks dead. And what makes me mad, while it was dead, we didn't have the extra capital to build a position, but we still have time. You still have time. And if you can't buy as much as you could have if it were 25, buy as much as you can at 40. I can't give you financial advice, as you know. It's all my opinion. But so here's what's happening with silver, in my opinion. And it might be happening with platinum. I think it's happening with gold, but gold, the weird thing about gold is, but it's true of any commodity, the dynamics of what you're seeing change with price. So if gold, let's talk about gold in a second, but there's a point at which there would be more supply of gold, but it's at much higher prices. But silver is a weird characteristic. Like gold, silver is moving to Asia, moving to the Middle East, moving to people who actually care. Really, Bill, I do care. I'm meant to come into some money, and I have a wee house in Scotland. We could get married. Really, Bill? I do care. I don't know where these memories come from, but and I'm sure it's not exactly how it happened, but it was something like that. So silver, unlike gold, and I actually think platinum. I don't know all the dynamics of platinum, but platinum might also apply to platinum. Palladium, I think, is used in catalytic converters. But what's gold used for? Jewelry, reserves for central banks. What else? I mean, when they launch a satellite or a manned space mission, gold's up there to protect with radiation, which is the whole theory of the Anunnaki and their. But anyway, let's not go down that road. But what else is gold really used for? There are industrial uses, there are medical uses, there are military uses. Sometimes it's used in paint to make a mosque glow in the distance, or a Orthodox church. It's maybe used for a chalice or an icon, but in general, gold is mined and then possessed. It's just held. And the argument goes that most of the gold that's ever been mined we know where it is. Well, theoretically, we know where it is. But what happens to silver? Up until recently, silver is not a reserve asset, although Russia just 3 months ago announced that they were going to be buying silver for their central bank reserves. And I would bet that China owns silver for their reserves, and other places. Silver is jewelry, and countries like, when gold gets expensive, people in India buy it for jewelry. China, we buy it for jewelry. You probably have it. My brother sold my mother's, but you probably have a set of silverware. Where does the name come from? Silverware. So there are sources of silver. You might have a teacup set that if silver prices go up, people are going to sell the silver and it'll be melted down. But for the time being, that kind of activity has not kept up with the demand for silver. The other sources, people like us or investors buying silver coins, buying silver bars. And on the one hand, that's a source of silver if prices go higher. On the other hand, in the West, and unfortunately, probably the West is mostly the Euro, Anglo type countries. So it's not really politically correct, but it's Europe, Europe ex Russia. Russia straddles both Europe and Asia. It's called the Slavophile problem. But leave that part of, just leave Russia out. And why not? It's easy. NATO does. the Democrats do. It's a good strategy for peace in the world. So it's Canada, United States, Australia, Japan. You would count too. So that's the one area where we have a little diversity, but that's basically it. And in those financial markets, nobody owns silver. Very few people own silver. Gold, which is more popular than silver, represents half of 1% of Western financial assets. Less than half of 1%. How long do you think that's going to last? I don't think very long. Gold's at 3,000. All you need is one guy or one woman. Who's a wealthy woman that's not liquidating her husband's assets like the Amazon wife? I think she's just selling everything. The casino woman, Edelson, or what's another woman? Heinz, or anyway. All you need is one wealthy woman out there to decide to buy gold in the West. And it might set up a chain. But if you move gold from 0.5% to maybe 3%, imagine what happens to the price of gold. They're buying gold and they still buy gold and they're shipping gold to Asia, to Russia, to India. And as the price goes up, that water falls down into silver. Well, silver is a tiny market. So if investors in silver, a Teresa Heinz or a Lauren Sanchez, when she gets married and then he dies and she has the money, maybe a Lauren Sanchez, or maybe a kid. Is there a woman that's built a fortune that's massive? Zara, maybe? No, that was a guy. Oh, I know one. The actress, is it Scarlett Johansson? She's worth $1 billion. Or is it the other one? I think it's... Or is it Jessica Albers? I think it's Scarlett Johansson is worth $1 billion. The Kardashians, one of the Kardashians worth $1 billion selling sex. So if they decided to move into the silver market, just one of them, silver would explode. But they're not there yet. They will come. They will come. Silver is tiny. So that investor market is one aspect, and jewelry is one aspect of demand for silver. Supply is, attics in the West, and basements. But there aren't really many primary mines for silver. There's I don't know, half a dozen silver companies who target silver, but mostly silver is an afterthought. So there's not instant supply coming from mining. Price will change that. All right, so where else does silver go? Silver goes to the military. As I've told you, I heard that one cruise missile takes one monster box of silver. Well, what happens to it? You put it in the cruise missile, and let's say silver goes to $1,000 an ounce. Are they going to dismantle the cruise missile? No. It's going to end up on some poor Palestinian's home in the West Bank, or a deserving Palestinian's home on the West Bank because Hamas hid somewhere and attacked Israel on October 7th. So let me take the politics out of it. But the cruise missile is going to be consumed. Silver goes into batteries. Silver goes into solar panels. Silver goes into the dump and landfills in the form of Polaroids and cameras and phones and electric wires and any manner of appliance, TVs, thrown away. That's where silver ends up. Silver does end up in some antiseptic medical supplies. Silver is used in other human uses, I think even eyeglasses, but it mirrors, for example. So silver has a lot of ongoing demand, and unlike gold, silver is consumed. The silver that is mined is consumed. Yes, it's there for coins. Yes, it's there for jewelry. Yes, people in the East are hoarding it. But in the West, it's just consumed. So what's the dynamic that's going on in silver? To be blunt, they're defaulting on it in London. London is starting to default on silver. Am I over-exaggerating? Perhaps. But I'm trying to make the point. I think they're defaulting now in silver. Is there enough silver out there and enough liars on the trading desks and enough prime brokers that'll look, bullion banks that'll look the other way? Sure. And they may be able to manage it. And all they have to do is drive the price back down so the pressure of settling goes away. You've seen it in all the stocks we trade. You've seen it in all the stocks we trade. But I think silver is going to fail on the physical market. The gold market has physical and paper, but I don't see how they can fail. They can have defaults. They can increase the cost of gold, let's say in Chicago or in New York versus London. And so jumbo jets worth of gold fly across the Atlantic. My understanding is silver's too heavy. They have to put it on ships. It takes months to get here to change that kind of dynamic, if they can at all. But I think there's enough gold out there in the hands of the government, the United States, the empire, as we may call it, who wants to keep our financial banksters alive. And I put it the other way around. Our banksters want to keep our government alive for their own aims. I think there's ways to play around in the gold market still. But silver, there is no way, if Tim Cook at Apple has purchased futures contracts in order to buy silver at a specified price in 2 months so that he can build out his iPads and his folding collapsible cell phones and his music machines and all that. And it comes when he asks for delivery, there's no silver. There isn't any silver to buy. It's not sitting there for a government to manipulate. It's not in Fort Knox. It's not in Canada. The idiots at the Bank of England can't be pressured to sell it. Gordon Brown sold England's gold at $240 an ounce. Sheer genius. Sheer genius. but it isn't there. So I think in our future with silver is a physical default that will be with a buyer who won't keep their mouth shut. And finally, Aaron, anyway, Aaron on CNBC will notice it, or Charles Payne will notice it, or the one that'll come out after silver's at 250 will be Kathy Ark, whatever her name is. So that's, anyway, those are all the biggest reason I think you got to build your position in silver is it's going to scare the world. It'll become unattainable, and you just got to get in early. Gold, I think, I'll quickly end on gold. I think gold right now is at 3,000. I think it's going to go to 4,500, 5,000, maybe even 6,000 in this move upward. It'll pull back, but not as far. We are having troubles with gold going east. We in the West have these ETFs, which have paper gold in them, and therefore there is a little bit of a pressure valve. Are we ready to have a Yalta or a Bretton Woods or they're destroying the last lungs of the earth in the Brazilian rainforest. Maybe we'll have a Brasilia meeting where Brazil, India, a petulant France, a pouting Canada, a talkative Italy, a subdued but arrogant UK, a polite but strong Japan, a inscrutable China, a bustling India, a czar like Russia, and the United States sit around the table, maybe Germany as well, but sit around the table and decide what our new currency is going to be. Now, it's just not worth going through all the scenarios. But one scenario, which personally I don't think is going to happen because nobody trusts the United States anymore, but it could happen if we regain our footing. But one simple thing to do would be able to use the IMF and special drawing rights and create a basket of currencies based on, pick a number, 40% gold. Maybe some silver, I doubt it, because there's not enough physically available. It's volatile. And then the other currencies. Well, if gold goes to 40% of the world's money supply, you do some arithmetic. I hear numbers anywhere of a revaluation of gold of 10,000 an ounce, 20,000 an ounce. Dr. Stephen Lieb goes even as high as $40,000 an ounce. I ask, why stop there? But anyway, gold will be suddenly revalued. Now, I've been focused quite a bit over the last 2 or 3 weeks on China. And I don't know if the information that I'm getting is, imagine a world, if it's some sort of Twilight Zone information, or if it's real, is certainly not in the mainstream media. China has a lot of gold, and I think if they came to the meeting, let's say in Brasilia, to create the new financial system, China currently would have the most gold and would be very powerful at that conclave. But China, I think, is in real trouble. And it's too big, too massive for any one person to figure out. But there's bulls out there that you never bet against China. There's others that say China's finished. I think China has invested its trillions of dollars in electric capacity, in high-speed rails, high-speed, well, state-of-the-art transport, electric vehicles, robots. China has 55% of the world's robots. They have our patents. Who knows if they get our patents because they work with the shorts? I don't know. But as we destroy stocks to help out a very small subset of men in our country get rich, China comes in and gets our patents. We gave them the patents. We sold them before Wall Street did to make money. So they have our patents, they have factories, and they have robots. So maybe there's a way out. They have great universities. But you know, apparently China's weaponry is way behind ours. Not hypersonic missiles, but the steel, the weapons grade metals are not there, apparently. I don't know if I'm getting good information. The military, even the ships aren't built. There's a lot of them though, but they're hypersonic missiles. Where did we spend all our money? Russia and China can take out an aircraft carrier group with these missiles, apparently. But maybe we have something like lasers to fight back. I don't know. But anyway, the other thing China has problem, of course, is water, fresh water. China has a problem with food. China has a problem with energy, hence the pipelines up to Russia. And the genius of Samantha Power, who made $63 million. But she's a woman, so it couldn't have been corruption. Couldn't be graft. Only men do that. Just the genius of Victoria Nuland, whose sister-in-law runs a think tank here, and Victoria and her husband make money on war and weapons. I don't know, guys. We have to have transparency, and we got to change go back to a free press. And anyway, the other thing it looks like China has a problem with is real estate, and we've known that for a long time. But the thing that's really got me studying it, and I don't know where to get real information. You don't get it on Google. Google, what is China's population? 1.41. Comes up everywhere, 1.41. 1.41. I'm starting to think China's population could be, I mean, you're going to think I'm off my rocker, but China's population could be as much as a billion people overstated. China's population could be equal to ours. It's a combination of the one child policy. It's also a combination, it's also included in that combination that young men aren't feeling economically secure enough to get married, and that they have the burden, any child, they have the burden, much like the West, and not the woman, whether or not you stay married. And so they don't see that as a good deal. Women are working there, and women don't want to marry 85–90% of the men they don't want to marry, so that women are staying single into their 40s, and apparently they're still princesses. And so the birth rate is collapsing, apparently, from what I listen to and see. I don't know how to find out if my information is right. But then apparently the Wuhan situation, or whatever you want to call it, wet market, to be, we don't want to blame it on anybody. And they locked everything down, and then they opened it up, and apparently opening it up was a mistake. But there's rumors that the funeral homes and the crematoriums and the emergency rooms and the hospitals have been running at full capacity, and that the cities are empty, relatively. And also the towns are empty. So that China's real estate has gone from boom to bust. Apartments that sold for whatever it is in yen, luxury apartments, are now listed at half the price and no takers. Lesser properties are listed, oddly down 85% from the highs and nobody taking. I don't know how to confirm that information. I do not know how to confirm it, but it's out there. And the videos are out there. The TikToks are out there. So my point, as it relates to gold and as it relates to creating a new financial system, moving away from the dollar, I can see where, if there is this population collapse, and I have no idea for sure, but if there is, China may have to sell its gold. And then we delay the reckoning somewhat. But they have a lot of gold, but they may have to sell it. The other thing is, if their bonds are collapsing and their seat at the table may not be as strong as they wanted it to be. So anyway, China's an open question. There's a lot of Chinese, apparently, young Chinese, moving to Vietnam, Thailand, maybe Malaysia. There's already a large population there, because it's a better lifestyle. It's a better lifestyle. So anyway, nothing's set in stone. All my predictions could be wrong. There's a lot of room for the United States to be strong, to recover, to rebuild our economic might and our industrial might. And but what I would say is, if China's in economic stress, it makes for a wounded animal, and you don't want to corner a wounded animal. And it might mean war over Taiwan, or war over Mongolia, war over Siberian oil. I don't know. I'm going to stop rambling right there, and we'll start talking about your questions. I'm going to go from the bottom. We'll go from the bottom to the top, and we'll do it again. Yeah. All right, let's look at the 3 or 4 or 5 stocks quickly. NIXX's up, I think. Yeah, NIXX's, this is delayed. Don't, I'm not trying to misrepresent, but maybe 15 minutes ago, NIXXY was $1.97. If you own NIXXY, if you want to trade NIXXY, I don't think it's a bad idea. What I'm hearing about NIXXY is there's going to be follow-on, you want to call it press releases, news that's been presaged in previous press releases. And the timing, by definition, is soon. So if I had to guess what's going on, they're going to be able to give you clarity on the share buyback they announced. They're going to be able to give you clarity on the revenue projections they made. And I've always said this. This is why I liked NIXXY early on. They've announced they want to be a $1 billion company over, I think it said over 36 months. I think those kind of projections get hurried up. So I think they'll do it more quickly than that. And I think you'll get some clarity there. Will it squeeze in the traditional sense? Yes, I'd give it 30-40% odds. Back in November, December, I was really optimistic we're going to be able to catch one. But I wouldn't buy NIXXY for that. I would buy it for a 10x, maybe. At the most, maybe hey, it could go to 30, 40, 50 in a squeeze. But if I bought it here at $2 and it went to 20, I'd feel very fortunate. I think in volume, whenever there's volume in NIXXY, I think you lighten up. You do the lighten up. How rapid is the news going to be? It could be two pieces of news, I guess. If you've got to come out and clarify revenue, etc., that's one. And if you're doing some sort, as your press releases said you're going to do, if you're going to do some sort of acquisition, that's one or two. Would two be done all at once? Maybe. But I think it's more likely you eat your peas first and then you move on to the mashed potatoes. So I think NIXXY might have two pieces of news coming. What time frame, I don't know. It's acting like something's coming soon, isn't it? Somebody knows something. So that's NIXXY. And for me, if the stock were in with some volume, were to trade to 4, 5, 6, and that's all it gave me in that volume, I might be tempted to sell quite a bit. And if the next day it opened at 30, I'd say, oh, well, I missed out. But I think there's an equal risk that even with news, it'll rally up and then the criminals will come in and crime, like they used to make fun of me for saying that the Kramers crimed, and get it back down in the mud again. So I would use the idea that let's take a quick profit, or it doesn't have to be immediate profit, but let's go ahead in the volume, which could last for days, admittedly. Let's take some profit. In the Twitter pieces out there, they say the stock could go to 20 by the end of the year, by the summer. Yeah. I think if they do what they're planning on doing, that's possible. And it's worth considering that. But let's see what the news says. But guys, I'm telling you, I don't know if we have time to be in NIXX for the summer or for September before silver is, $100. All right, so that's that. Let me look at Finger. Finger was up earlier. It's up today. It's at 132. I guess it was higher. It seems to be every time, as Ham predicted, at 140, they put pressure on it. But Finger's up. Let me look at Railtown. And Railtown's not up. Hang on, stupid thing. Yeah, it's in the red a little bit. It's at 27 cents. I think Railtown's a short-term thing too, and I think Railtown's story is very similar to silver as far as I'm concerned. It's the same kind of numbers. I think you're not going to be able to buy Railtown below 35 cents very much longer. And then if there's news, I think it can go to 90 cents, a dollar, $1.20, and maybe a lot higher. It could break out. I wouldn't take the slow or dead movement in Railtown as a negative. All of the buyers can't buy, as I've explained. There's a pending corporate action which needs to be announced. And I think once it is, it pent-up demand for the stock will show up. Kangers. NIXX is doing beautifully today. I think we will hit $12. Yeah, I think that was Kangers. That would be my target for NIXX. I don't know what I'm going to do, but I don't have very much. But it's fun to have it, but I don't have very much. Yeah, I think a reasonable target would be 12 or even 13, 14, 15. But is that being greedy? Could it only go to 8? Yeah, but I think 12 is a good target in a if it bursts out. But the risk with NIXX is it had a lot of volume twice before, and as you know, it traded to 12 pre-market, opened at 8, and then they just kept the heat on it, pressure on it, and it went down. So I love your target, and I think we could go to 12, but just be aware they've managed to dampen price action twice before, and they might be able to do it again. But I heard, Kangers, that the real short went from something like 200,000 shares to 2.4 million. The real short over the last month or so. I don't think I wrote it down. So yeah, I think $12 is a good number. In my opinion, we should not be trading hope of short squeezes in stocks for squeezes in commodities. There are nefarious, powerful forces that will fight squeezes regardless of settlement values. Well, you're okay. I hope, and I think you should follow your opinion. I don't share it with you. And by the time you change your opinion, which you will, silver will be $200 an ounce. So, I've already talked too much about silver. I'll try to do a separate video on silver, but I think I've laid out a lot of reasons. You just put out a kind of apropos nothing statement, powerful forces. Well, buying silver out of 1.3 billion people, whatever percentage of the population in India, China, whatever population is left, Southeast Asia, where the population is just fine, and then Western buying. But you didn't hear me. You didn't hear me. On silver, and I'll say it again, and I'll try to do a video on it. Demand for physical silver right now is equivalent to supply of physical silver. I actually think the demand is more than the supply right now. And I don't think there's anything in the warehouses. I'm being simplistic. So all you need is a failure in physical delivery. And where are they going to get it from? It doesn't exist. They're only going to get it from higher prices. Higher prices will get you to call your mother and say, hey, do we have any of those knives and forks and spoons left in grandma's collection? And slowly, so you're right, there'll be some supply, but it's a powerful force. Worldwide demand for silver in a tiny market. Talk about powerful forces, not nefarious. Just 100 million people wanting to own silver overnight. And you're wrong, and you'll be wrong. And you think that it's easy to be in short squeezes in stocks? I don't see it. I think GTII, to bring up a bad word, I think FingerMotion were squeezing 2 years ago. But talk about nefarious forces, they stopped it. But that was a nice run. It was 10x. Hell, if you got in at GTII at 9 cents, it was 100x. It's one of those, what was I thinking? I didn't get in at 9 cents. I'm just saying some people did. So if you think finding short squeezes in stocks is easy or it's worthwhile, yeah. And I'm still looking. I'm still looking at G-Bucks and NIXX and RLAIF. I think RLAIF actually could have a miniature squeeze. So yeah, I mean, it's worth, but by the time you get interested in silver, you'll be able to buy maybe 1/6 of what you can buy now. And it's all right. That's what makes markets. And I could be wrong, I guess. I wouldn't be pounding the airwaves on silver if I thought I was wrong, but I could be wrong. And maybe some shitty stock is going to squeeze and we'll be in it. No, I know you didn't. I tried to catch myself. You didn't say that they're easy. You didn't say. And you've been here a long time, so you know that they're as rare as hen's teeth. That's it. They're as rare as hen's teeth. That doesn't give us any hope. But having said that, middle ground, if I'm right about how the stock market's going to behave, and Ham's even close to right, what happens to short sellers if the stock market starts to go up dramatically? We could be in some short squeezes. So I guess I have to correct myself, but I just feel such urgency that people should own silver now. And maybe it's because I don't own any. I used to, but it's hard to hang on to things sometimes. Yeah, you have middle ground. You're right. So Jack Wolf wants to distract me because he's not a shill. He's an honorable person here. Um, I think GTII is worthless. And so if you're looking for it to do something, I think you're holding bags in GTII, as you put it. I doubt you're holding bags in anything. I bet you shorted it down. But I don't expect anything good for your position in GTII. Maybe you can trade out of it once it starts trading. There looks like there's going to be an enthusiasm of buying it. Maybe you can take a quick profit. Logic I talked about, but my view is Aubrey Advisors and Chadron Financial, who you may be familiar with. They sponsored the SPAC in Data Logic, which became Collective Audience. And they were the financial advisors to Logic, which was spinning off Data Logic. And you know all this if you truly are a bag holder. So they did do what they said. Aubrey Advisors manipulated and caused harm to all of us by delaying. You know, they're a big multi-billion-dollar financial firm. They slow-walked the answers to the SEC. I think they did it on purpose. So Logic ran out of money. Logic always responded right away. Logic ran out of money. And then the Data Logic part that Aubrey and Chadron were financing ran out of money. And I'm sure you knew this. So what Aubrey did was raise $5 million with their powerful hedge fund clients after sponsoring the SPAC for 16 months or something like that. And the stock was $11 the whole time. They raised money. They did a toxic financing that I lost my cool on. The gentleman from the American Stock Exchange said, no, there's systems in place. That's a good deal. You know, you might be right. He's an honest guy. He's an honest guy. But he doesn't see it. I said, oh my God, this stock's going under $1. It might even go to a penny. I might be mixing conversations. Oh, you're crazy. It's gone, you know, whatever. Well, they got Collective Audience down to a penny, and they got Logic down to a penny. It was toxic financing, but I'm sure you knew that, Jeff. The two financial firms, Aubrey and Chadron, raised $5 million. They gave no money to Logic. They gave no money to Collective Audience. So ask yourself, why didn't they raise 10 million? Why didn't they raise $7.5 million? They've been funding this all along. They have multi-hundred-billion-dollar hedge funds behind them. It was on purpose. It's a sting operation. They did it on purpose. So they paid the lawyers $2.5 million, and they paid the financial advisors $2.5 million. They gave Logic nothing, and they gave Collective Audience nothing. Then when they de-SPAC'd on a Wednesday, the powerful brains behind Chadron and Aubrey, who, according to their website, I think it might be Chadron, have sponsored hundreds of SPACs and de-SPACs, and the powerful attorneys who are all honorable. They're never liars, and they're never paid to look the other way. They're not part of this criminal action. Somebody forgot to inform NASDAQ, hey, for about 24 hours, as we do the de-SPAC, we're going to be out of compliance with your listing requirements. But that's Thursday, basically. But by Friday, end of the day, we're going to, the whole kit caboodle bringing in the new investors will have enough shareholders. So maybe you could forestall, put in, and by the way, what bureaucrat even notices anything in one day? No, one of your friends called in and alerted Nats, they stopped trading. So collective audience opened at $42. They stopped trading. By the time it started trading again, it was $8 on its way down under $1. But you know all that. You know all that. So you all sold that. You sold Logic down because Logic had no money. There was panic in the troops. All the attention went to collective audience. So Logic sat sort of unaddressed for a little while. Logic needed to raise money to keep their finances, their financial filings. So instead of, like the American Stock Exchange guy felt that they were going to come out of this with 90 million shares, they doubled or tripled it to 350 million shares because they needed to raise money to keep their finances filed to have value. So your selling really worked. Your attack really worked, Jack. So that's what happened to Logic. Logic was run by Brent's son as CEO, but Brent was also on the board and highly involved at Collective Audience. So they brought in a guy named Peter Boards. Peter didn't believe, and I hung in there against groupthink very uncomfortably. And I give credit actually to Peter because I think quietly he listened to me. But as a group, everybody got pissed off at me. Well, I was right. My projections were that collective audience is going to be destroyed by these bastards. And I was right. But I think Peter's doing a good job in a huge market space to create value. The problem is Aubrey Advisors is still on his board and they're still providing financing. Do you think they're doing that for collective audience, or do you think they're doing it for Polar, their big hedge fund client? I don't know. It's up to you. Well, in that scenario, Logic kept going. And I think Brent was overworked, and Logic announced that they were going to bring $1 billion worth of companies in as a reverse split and revenue. It was going to be 6 or 7 companies. It's all in the news filings. But ultimately, Logic agreed to one company. It's called MetaLab, I think. You can look it up. Well, MetaLab has a slapdash website. It's run by I don't know where he's from, but it's run by a gentleman that speaks 5 languages. Obviously English, Russian, Hebrew, and I think he said, I'm going to get it wrong, a couple of other languages. The company was created simultaneously with the SPAC of DLQ, which became Collective Audience. And I'm not going to make any connections, because if I make the obvious connections, I'm just like Hitler. So I'm not going to make those connections. But it is my contention that Aubrey Advisors, Polar, and you and short sellers destroyed Collective Audience, Data Logic, and Logic in a sting operation that took $150 million out of the market. And you're here to gloat. It's okay. You're here to gloat. Well, the effect of rolling Meta Lab or whatever it is, Meta Woman into Logic is you as an investor are presented with yet another story to try to digest. Is this CEO honest? Does his business plan make sense? He speaks 5 languages. Does that make him good at managing a company? Or is he just a financial engineer here to implement the coup de grace to the giant purloining of the public's purse that occurred directed by Aubrey advisors? My opinion, that's what happened. And I own a lot of Logic, by the way. I own a lot of it. So it makes me sick to say that. Now, I told, and obviously you're too busy to come on and listen, but over the last 2 or 3 weeks, I told you, and I can quickly read what's so Ham had a call, and I didn't know about it, so I didn't play it for you. You can go back and listen to Ham's call. So I guess I don't know what to read into that. With MetaMune, you've got to determine, Meta Lab, whatever, you've got to determine it's 100 million. It's not 800 million. It's not $1 billion. It's just one company. So Logic has gone from 6 or 7 to 1. So now you have to determine, is this Meta Lab on the up and up? Does this guy who speaks 5 languages and his company has 10 followers on LinkedIn have the depth of skill and performance to grow from 100 million to $1 billion? Does he have other companies he has to roll in? Because he now controls Logic. Brent Sun no longer controls Logic. He doesn't control it. MetaLab does. My opinion, MetaLab is there to protect the crime that Aubrey Advisors has worked on for 2 years, and you may be aware of. I've been told by somebody close to the company at Logic that they will provide me something. It was supposed to come a week ago, that will allow me to give you a detailed update on Logic. I'm still waiting on it. I've been corrected by people close to the company that I'm wrong. That in fact, this company is not part of any harm, and that this company intends to grow and we could get a decent result. But Logic now is 750 million shares. So it's not the 90 million, it's 750 million shares. My own view is, at best on Logic, you're going to see 5, 10, 15, 20 cents at best. You'll never see a short squeeze because they have it under control. Brent's no longer in charge at Logic. Brent is actually in charge at NIXX. And I think NIXX is seeing incredible deal flow from the contacts that Brent has. Unfortunately, because they sold Logic to one company, I'm sure under the pressure of Aubrey Advisors, we're not going to benefit from that deal flow, in my opinion. I stand to be corrected, but I think you're going to be holding the bag, as you put it, in Logic. Ham just had an updated call that apparently was excellent. ask me to join it, and he didn't ask to be here. So the best thing to do is to go to X. It may be recorded there, or maybe he did it with Giannis. I don't know. So I don't know what to tell you on that. I don't think you're going to be a bag holder in FingerMotion, even though you're part of the shorting in the stock. FingerMotion has earnings coming up. The audit is almost certainly finished. They have in the earnings, I don't expect it to be dramatic. I don't think, it could be positive for the fourth quarter for the first time. Could be negative. But if it's positive, I don't expect it to be more than a penny or two. If it's down, it'll be a penny or two. I mean, but in the earnings could be the exciting thing. What's going on with the insurance companies and that process? What's going on with the vehicle contract? If those are leading to profitable, ongoing results, FingerMotion could be priced at a whole different level, but we'll find out when that's announced. I think that's April 15th. So until then, you're a bag holder. FingerMotion looks like it's trading well, so I think it's a good risk reward to get in. I think there's 2 or 3 weeks here where people can buy it. But I think if fourth quarter earnings come in strongly and provide guidance for the 2026 fiscal year, I think Finger can be revalued at $2, $3, $4, $5. I think you guys will continue to short it, stock you don't own, but I think it'll get harder for you to do it if there's a positive earnings trajectory. I think there's a potential for further updates on the vehicle contract, further updates on the insurance, but I know of nothing that's pending in terms of news. Ham has a very strong source of information that he's shared. I'm sure he shared it on the last call, that there's a buyer of FingerMotion, and he's shared it many times, in the millions of shares range. They've already bought maybe 20-30% of what they want to buy, and there's more to buy. Does that put pressure on you? Does that limit the amount of shares you can sell? Probably not, because you can continue to sell stock that doesn't exist. But it does put a significant buyer into the stock, and adding it up, it might create a buyer that owns more than 5%. I don't know who it is, but that could have an impact if that ever gets filed. There are rumors of some company coming in. My opinion, FingerMotion, and this is the weakness that you're trying to take advantage of. FingerMotion has an expertise level gap they have to fill, and they also have to finance the ever-expanding demand under these vehicle contracts. To me, what you would love is if they did another deal through Roth Capital or someone and diluted the shares. You would love that. And maybe they'll have to do that. I think they're going to need more money. But I don't think that's what they're going to do. I think there's a potential, and this is more logical than rumor, for the SAIC to somehow bridge the gap so that FingerMotion continues to have access to the exclusive contract they have, which you guys would like to bust. But if someone came in and it's in their own interests, like SAIC, FingerMotion can very soon, I'd say within 2 quarters, maybe 3 quarters, become self-funding on the vehicle contracts. And then you guys have no power anymore. I don't think you're going to hold, if you're long, I don't think you're going to be holding a bag in FingerMotion. I think FingerMotion will not only get your money back, it can possibly make the money back that you've lost in other trades. So I don't think you're going to be bag holding. Do you have to hold the stock 6 weeks, 8 weeks? Yeah, probably. Do you have to hold it longer? Yeah, probably. But I think the trajectory is upward in FingerMotion. And I think now's the time, while you're shorting and there's some doubt, the price is nice. Is there risk? Hell yeah, there's risk. But I think they're gonna build out. What's the other one? G-Bucks. You're still bag holding in G-Bucks. G-Bucks is a short squeeze play. I have no idea what you paid for it. If you bought it when Ham was pounding a table on it at 75 cents, at $1, at $1.20, at $2, at $2.25, $2.50, $3, you're not holding any bags in Z-Bucks. In G-Bucks. G-Bucks is trading at $4. So if you're like me and you bought it at $8, I guess you're holding a bag in it. I think G-Bucks is still a short squeeze candidate. As you know, since you pay such good attention to your investments and trades, G-Bucks has announced a letter of intent for $100 million coming out of Abu Dhabi, which becomes firm on a case-by-case basis for acquisitions. That sounds pretty serious. Now, it is a letter of intent, which means there's a risk it can disappear. But that sounds pretty serious. What it does sound like, Jack, is they're not going to go to your friends to raise money, whether it's from the Kramers or from the Yorkvilles or from the, window office on Park Avenue LLC finance company. So it seems to me the short position in G-Bucks is not going to be covered by newly issued shares via a toxic financing. They've announced other things, AI this and competition this going into Canada. You can read that in the news to your heart's content. My opinion, G-Bucks ran up. They drove it down for the month-end reporting to clients. They were successful with an air pocket. The volume has disappeared, and I still think G-Bucks has in it the ingredients for a short squeeze. And I'm not talking back to just where I bought it at 8. I think it can go into the teens or 20s. And if you listen to Ham, if it really catches fire, it can go much, much higher. But G-Bucks is purely a gamble on a short squeeze. So you'll either be left holding the bag, or you might make $50, $100 or more a share. But it's a complete flip of the coin. Only you can judge whether you want to hold the bag or you want to get out. If you got in where Ham was telling you, you're in a profit. Get the hell out. And then you won't be bag holding. ZJYL, I don't think you're holding a bag there either. But it depends on where you purchased it. They did a forward split, 20 for 1. So the stock price now, I think, I'm not going to even guess because I confused it with GDC. I'm surprised you didn't throw GDC in there. ZJYL is a piece of shit company. It has, I think, wheelchairs. You're in it for the short squeeze. So for you to say you're holding bags in it is a way of trying to throw shade and to remove responsibility from the fact that you bought it as a short squeeze play. It is a piece of shit company. It has nothing. But what it does have is a group of investors who owned more than the float. In fact, I think they owned more than the shares that were even at the DTCC. I don't know. You can go do your own, because you're a bag holder. You might as well do your own research. The short position is bigger. The whales own more, but the short position is bigger than the float by some factor. And by doing the forward split, the shorts are in more trouble than they were before. So, Jack, I can't answer the question. You would know with the guys you work with. Maybe as more time goes by, you guys are able to move the short positions over to Europe and just bury them there. And there's no record, and you're able to get the money off to the Cayman Islands, and you walk away from the LLCs. I have no idea. But I think ZJYL still has a chance when nobody's looking for a short squeeze. But I think it's a complete crapshoot. And you might end up holding the bag in ZJYL. I doubt you're losing money depending on where you got in, because I just can't picture the chart in my head. But if you multiply this price by 20, I think you're not losing money in that trade. So I hope you enjoy holding the bags. And I think it's charming of you to come and gloat and make fun of people who have had to put up cash while you sell non-existent shares in a racketeering fashion with your associates on Wall Street. I'm not going to, Jack, I think you're a shill. I think you're a shill. I'm not going to answer any more of your questions. Jeffrey Sachs said the COVID story was false and that its origins were, you're talking about Professor Sachs? I like him. Origins were back to the United States. That's why the Red Cross found COVID in the blood samples here. Well, Mitchell, I don't know. I listened to Jeffrey Sachs. I've never heard that. But I believe that the United States did fund gain of function testing, possibly in the Ukraine, but possibly in China. And I'm not against the idea that the United States is responsible for the, I don't know, they call it a virus. I'm not even sure it's a virus. It's a, I hope it's not a bioweapon, but it's a very dangerous, I'm not a doctor, but it's a very dangerous pathogen in the human body. And Mitchell, I'm not against that the United States caused it, or did it, or funded it. So, on the other hand, I'm not against the idea that China did it. I don't know. I've never heard Jeffrey Sachs speak about it. I like him very much. And he's quite forceful about our neocons and what we've done, the warmongering we've done in the Ukraine, and that Israel is a genocidal spear at the end of our tip, and that it's time to change, and that we're responsible. We can't put that genocide off on Israel. We're responsible for it too. So. Slander? Yeah, you're a lawyer, I guess. If I've misjudged you, then maybe it's slander, but you speak like a shill. So thank you for using the word bag holding. Finger is most interesting. Yeah, I think finger is most interesting. One thing that's often forgotten about China's economic woes is that they have at least 4.5 trillion in personal savings. Yeah, I agree with that. Not only do they have personal savings, but Mitchell, I don't know how to offset it when a lot of people have multiple properties. But I agree with you, by the way. I have a very good friend who's Chinese, and she says, I do not understand your mother. My mother, when she had $3, she spent $1 on us. She keep $1 and she or something, and she put $1 in her pocket. And her point was that you're just like yours, is you save. But the other thing, Mitchell, is no one knows the numbers. China reports gold holdings that are less, they're very low. But people believe China's government holdings, reserve holdings, bank holdings of gold are as much as 25,000 tons. We supposedly have 8,000 tons. But in addition to that, China's population might own enough gold to bring the total that China owns to 36,000 tons. These are huge numbers. I also think China works hard. I think China has built the infrastructure. We squandered our defense money. We just totally squandered it. China has used their money to build the relationships with countries in Africa, South America, Asia, elsewhere for resources, and they've also built their factories, and they've got great universities. They've got their average population apparently is 41 years old, but they've got a vibrant young population. And they like I said, they've got 55% of the world's robotic efforts. So I don't know what to say about China doom, because I don't think I was trying to say that China has a doom ahead of it. But I'm trying to understand what's going on, and I think they can recover. I think China plans ahead, and I agree with you. They have enormous reserves. But Mitchell, my conspiracy theory head goes where the West, the banksters, took a lot of money and tried to claim the resources of Russia in 1999. They did it with Gaddafi. They did it with Hussein. They did it with Chavez. I don't know. I worry. But no, my point isn't that China's doomed. My point is China has challenges. We do too. The United States has huge challenges, and I think we should work together and not go to war. So I think that's fair enough. All right, so I'm going to let you. I'll go through with these, but I'll let you go listen to Ham. I'm sorry I didn't have Ham's call for you. He didn't tell me about it, and I don't. I think you can go to X and there'll be an interview. Yeah, I can do that. I find it fascinating. Yeah, I can do that. It would go on too long right now, but um, I I do think if if they're coming back, which Zachariah Sitchin seemed to imply would be maybe 2070, but he never really said, but that's where people think using, what was it, 3,500 years is the orbit. Um, there's not that many of them, so it would explain depopulation, and it would explain concentration of wealth, particularly gold, because that's what they're after. Uh, but anyway, I'll do it some other time. Yeah, Dustin, I don't know. Diversification is for after you have a lot of money. I don't think I don't know your situation, but for most people, particularly if you own a home, you have a big bank account, their stock account, uh, you don't have to diversify. I mean, I don't know. There's two schools of thought. If you diversify, you keep what you have. Um, but a lot of diversification is illusion. It's illusion. What's coming, I don't know when it's going to come. Is it 6 months or 6 years? But everything in the financial market, your dollar bills are credit. Everything's credit. Your bank account, your brokerage account, ETF, it's all credit. The only thing that's real is silver, platinum, and gold. And if there's a big reckoning, remember, this is all a mutual confidence game. We agree dollars are worthwhile because the FDIC stands behind our bank balances, and the United States Treasury has never defaulted, and we're the most powerful nation in the world. A lot of assumptions in that sentence. A lot of assumptions. But it's carried everything forward. That's fine. It could go on a lot longer. It could go on a lot longer. Um, uh, if you have $10,000 and you put $1,000 in 10 stocks, I don't think you're diversified. You're in the stock market. And then you could say, well, I put, I put 1,000 each in the Mag 7, and the rest I sprinkled amongst these. Yeah, I guess you could argue that's a little more diversified, but the Mag 7 are going to go up and you're not going to know when to get out, and they'll come down. Nobody's in gold and silver. I told you, 0.5%. So that's real diversification. Real estate's really complicated in my head. I think real estate's important because it will survive the storm of a financial storm, collapse. But will real estate go up as much as gold, for example? Well, I think yes, when it comes to wealth preservation, if you own farms, ranches, raw land. I also think if you own, it's tricky. If you own premier residential or premier, maybe apartment buildings, depend on where they're located, maybe factories depended on where they're located, warehouses depending on where they're located. In other words, it may not be all real estate, but I think real estate will at least preserve wealth and probably grow in value over time. The questions are, of course, the macro questions nobody can answer right now, growth and even this population thing. But so I think real estate, the key is to make sure you own real estate that you perceive is valuable today, and in the scenario you project for 5-10 years from now will remain valuable. How it breaks out in the great sifting of assets, no one will fully know, but a piece of property relatively valuable today, odds are it's going to be relatively valuable to the other property down the road. Gold, when it goes up, for example, right now, if you're buying gold, I think there's a whole lot of wealth creation in it. But at some point, it switches to wealth preservation. And I would say real estate probably primarily falls into the wealth preservation stage, although I think there's still money to be made in certain aspects of real estate. Gold, I've already explained. Silver, I've already explained. I don't know what other assets. You might know other assets, like your own knowledge, your own, I don't know, chain of restaurants, or anyway, there might be something that you know how to do, and that's diversification. I think getting out of debt is very important, and I think that's maybe not all debt, but credit card debt. By the way, I love AOC has pushed forth with Paulina Luna the 10% cap on credit cards. I hope that goes through. But anyway, if you start with 10 grand and you diversify, if you hold it 10 years, you might double your money. If you start with 10 grand and you've done your research and you concentrate a chunk of it, you might turn it into 70 or 100,000 in one play. And I don't know. It's up to you. It's up to you. I understand your frustration. G-Bucks, GTI, Finger to buy XRP, AMC, and silver. I don't know why you'd buy AMC, but that's you know more about AMC than I do. I think XRP makes a lot of sense. But what I like about your sentence, those three, they may all, XRP, AMC, but silver, it sickens you that XRP went from 30 cents to $3. Well, put that thinking in your head about silver. It's going to sicken you when it's 90. I could have bought Bitcoin. I'm not going to go back through my story. It wasn't a whim. I was studying it under $1. So, Oh, I think there's great female drivers, by the way. I I know I have a very good friend, and she's the best driver I know. She's great. She happens to be German, but she drives fantastically. And there's a lot of idiot men drivers. So I'm just, I guess you can't make generalizations, but I use driving as an example, but on a trading desk, men's testosterone engages, and I might be wrong about that, but that's my theory. I bet I would walk that back with you, Moody. Um, uh, and I probably should have added younger men, by the way. I probably should have added when men are in their 20s or 30s even, or teens. UBS from Credit Suisse, because that was a forced marriage. That's interesting. I'll look that up. Green on Friday. That's great, Edwin. DJT might start squeezing today. Well, Ham would be the guy to ask about that, I guess, but let's look. 20. It's up. Augustine, I would buy calls if I had money. I might go out and buy 10 calls, 20 calls, if you can afford more on that, and see what happens. Certainly, if I'm correct, and there's no guarantee I'm correct, that the whole market runs up, DJT will participate, and there's a potential of short squeeze. And you got Trump and Devin Nunes, maybe, it's the whole buzz. But more importantly, DJT went to 50 before. So you're buying it in the 20 range, and maybe it goes back down from here, but at least it seems reasonable it can go back into the 40s and 50s again. That's a nice, if you buy calls, that's a nice trade. Gold at 50,000 would be a reevaluation. Yeah, I think I don't think it would get rid of debt. In a moment in time, at a moment in time, it might get rid of debt, but it wouldn't get rid of our deficit or our deficit spending. So we'd go right back to running up our debt unless we change. And I think Trump's trying to change things along those lines. It's a big subject. BlackRock is about to sign an ETF deal with XRP. Well, I called into Junk Savvy, and we haven't connected, but there was a gentleman on one of her calls about ETFs, and I have a friend at Merrill Lynch who's been studying it. I don't take that as a positive. I don't take that as a positive, but it might be. It might be. I think once assets get into ETFs, they become derivatives and they become paper. Well, it's blockchain. Maybe, but is the ETF on blockchain? I don't know. And I don't trust BlackRock, but whatever. You might. I'm just throwing out my objections. I can be wrong. I think SLV is worth trading and it's going to go. SLV, GLD, all of these are going to be where people go. Why? Because the wealth advisors at Morgan Stanley, Merrill Lynch, Wells Fargo are going to tell people you need to buy this to own silver. You want to own silver, buy SLV. So yes, I think you should. You can not should. You can use options there. What you have to be aware about is that the silver and the gold, the silver in SLV and the gold in GLD probably isn't there. It's just all paper contracts. Maybe they have some, but ETFs are a place that, you know, that three shell moving the ball around, they can hide their fraud in ETFs. That's my opinion. But yeah, those will trade. Those will go up. I wouldn't hold them for the 6 years. If, let me put it this way, Dita, if a bank goes down because of silver, these things will go out of, they'll give you your cash back maybe, but you won't get the benefit. It's a lawsuit waiting to happen. It's a nightmare waiting to happen. But as long as you trust the system, and as long as you trust the banking players and ETFs, yeah, why not? Why not trade those? That's where the money's going to go. And you'll see them go up. So yeah, and if you're buying options, you're not doing it for long term anyway. Might as well. Let me say it differently. Very few brokers are going to recommend PLSV, the Sprott Physical Trust, off the top of their head. Most people are going to recommend SLV. Most people are going to recommend GLD. So that's where, if you're trading options, that's where you should be. I buy silver. I hide around my house. I like that. Where's your house? Let's go NIXX. Another live stream of Debbie Downer negativity. Well, another shill, but yeah, if you don't, go listen to someone pumping up the volume. Go listen to somebody who is going to promise you the moon. Really, go there and buy it. Go buy GME. Man, that's going to be the squeeze of all squeezes. Go buy it. You know? Don't listen to me. I'm a Debbie Downer. Yeah, I think I mean, son of what, I'll go you higher. I think gold could go to $100,000 and silver could go to $100,000. But at some point, son of what, the movement crosses the line from wealth creation and moves to money. It moves to wealth preservation. And a lot of that move is just becomes the collapse of the dollar. It's not this book, it's the other one. It's what happened to the mark. I mean, the mark went to like a billion marks to the dollar, 1.4 billion. It's the collapse. BON was on fire today. That's great. Can I buy some yesterday? Appreciate your honesty. Never let the others try. Thank you, Stephen. That's awesome. Did you get my email? Maybe I didn't look. Do you know I never looked? Arthur, I'm not gonna. No, how's his voice go? Oh, a choo-choo. Oh, a cowboy hat. A basketball. If I wanted to dribble, if I wanted to see somebody to see me dribble, I'd call the nurse. Hobson, do you remember when we used to play hide and seek? I would hide and you would never find me. Do you know I never looked? Yeah, yeah. Older, I'm older. Yeah, they're good. Ham predicted that they would keep Finger at that level. So not permanently. He didn't say permanently, but that gives you the chance to buy the dip, sell the rip, buy the dip, and then it breaks out. Red Pepper Ronnie, you're the man. I really enjoyed your detailed calling out of the naked short chills yesterday. Well said, well spoken. Thank you very much. Thank you very much. Thank you. Thank you very much. Elvis has left the popcorn, left the building. Well, VL Warrior, I had a large popcorn. I almost offered it to her, but she was drinking a beer. It's just a different species. I'm not that big. Biden Mencha. Grow up, Arthur. You'll make a fine adult. I didn't have any specific good news, but if somebody gave me $1,000 today, I think I'd put 2/3 of it into RLAIF and 1/3 of it into NIXX. And next week, if NIXX went up, I'd sell it and buy more RLAIF. And when RLAIF goes up, if it does, I would really try to buy some silver. Are any stocks? Oh, I love that you asked that. I love that you asked that. I might beg off on answering it right now, or I'll take a break and come answer it. But the good news, if we miss silver, we miss gold, is the miners. There's still plenty of money to be made in the miners. So just give me a second. I'll come back and try to answer that. Well, all right, you guys. So, Narad, Dr. Stephen Lieb, PhD, best-selling author of The Oil Factor, The Coming Economic Collapse, and Game Over, and his wife, Donna. A renowned expert on macro perspectives of global economic trends, Lieb is the founder of research and director of Lieb Group, an investment management company. Donna Lieb co-authored the books, executive editor of The Complete Investor. She has a master's degree from Columbia University. All right. First, I'm going to quote from him here. The name of this book is China's Rise. China's Rise and the New Age of Gold. It's a big, long book. So I'm not going to read it all. Came out 4 years ago. Okay, so going back to answering the question on the ETFs, on the gold side, gold ETFs, he discusses 1, 2, 3, 4, 5 ETFs. But I'm going to come back here. Narad, I'm going to give you some names. Unfortunately, he focuses on gold. And I am going to see if he has any mention anywhere here on silver. No. So that's not a good, this isn't a good choice. Let me go to Jim Rickard's newsletter. Okay. The reason I go, Narad, to these people to get names, it is cheating, I know, but it's also they're the ones that are going to be on TV. They're the ones going to be talking. They're the ones sending out newsletters. So that's where the buying is going to come from. A big company is First Majestic Silver. The symbol is AG. And he got into it at $12 and it's around $5.62. AG, that might be a good one. First Majestic Silver is a good company, but that might fill what you're trying to do. Franco Nevada is FNV. They're gold, but they have silver. So I don't know if that's going to float your boat. But the one I think's the best, Wheaton Precious Metals, but that's a big company, Wheaton Precious Metals. There's a small company I invested in, but I want to find out. It's a great company, but I think they've been a victim of toxic lending, and I want to find out what's going on. So There's a silver company out of Mexico. Can't remember the name right now. There's just not many. Yeah, Narad, let me try to, I don't have, oh, maybe he gave some names. All right, mining stocks. All right, this is what Mike Maloney says on mining stocks. Now we're finally getting real. Mining stocks represent real gold and silver, and it's still in the ground. I absolutely believe in having a core position in physical first, but once you have as much of that as you're comfortable with, you should look at the companies that mine it. When prices are roaring higher, miners tend to do even better than the metal. But when prices fall, they get killed. Mining stocks offer leverage to the gold price. A 10 to 20% rise in the price of gold can easily cause a 100% rise in the profitability of a company. Of course, buying stocks instead of the metal increases risk. He refers to the Barron's Gold Mining Index. I wonder if that has call options or futures on it. I have to look that up. BGMI. But he doesn't give any names. So I really don't have the silver names. The gentleman that was asking about SLV and GDX, let me just see. Hang on one second. Let me see. All right, Franco-Nevada. Yeah, it's a royalty company, just like he mentions it's all gold though. So. I mean, Dr. Lieb's 3 gold companies, Newmont Gold Corp, Barrick, and Franco-Nevada. Nova Gold and Endeavor. All right, I don't want to do a long divulging in here because here, Fresnillo, there it is, Narad. Fresnillo, Fresnillo. Symbol is F as in Frank, N as in Nancy, L as in Larry, P as in Paul, F as in Frank. It's a mid-sized company. It's out of Britain, and it produces silver along with gold. So then he said, this is what Dr. Lieb says about silver. Silver is the one commodity likely to give gold a run for its money. Silver's history as a monetary metal and store of value extends even further back than gold's. Yeah, all right, let's skip that. Silver has a lot in common with gold, but is less rare, that's true, and more easily tarnished. And it's also less dense. And that makes it less suitable as a monetary metal. The ratio is about 2 to 1 in terms of taking up space. An ounce of silver requires twice as much room as an ounce of gold. As of this writing, an ounce of gold is worth 80 times an ounce of silver. And that's what it is now, even though the prices have gone up. A nose better in a horse race can bring millions more in stud fees. So sometimes being a little bit better is a dramatic change in value. When investors focus on monetary issues, gold can get an enormous premium over silver. Silver also differs from gold in having important industrial uses. It's the world's best thermal and electric conductor and plays a key role in areas ranging from medicine, in killing bacteria, for example, to solar energy. This industrial role, where silver often has no substitutes, works against it as a monetary metal relative to gold because it means that some silver gets destroyed. In contrast, gold, whose few industrial uses can be easily performed by other metals, does not get used up. Gold does not get used up. It is thought that almost every ounce of gold that has been mined still exists on the face of the earth. Being fixed in quantity is exactly what you want in a monetary metal. And there's no period on that sentence. Silver will continue to be seen as a store of value, and it will be prized in jewelry. Its simultaneous leverage to monetary inflation and industrial demand makes silver unique. When gold prices are rising, silver prices often rise more quickly, especially if industrial scarcities come into focus. That's what I'm arguing. By contrast, when gold corrects, silver tends to fall further, farther, faster. Since mid-1975, when the first post-war gold bull market took off, gold has more than doubled silver's performance. However, when gold was rising, silver was the only metal to come close to gold's gains and sometimes exceeded them. All of this is to say it's good to have a solid stake in silver. Fresnillo offers a way to get into silver on the cheap. Headquartered in London, it has mines in Mexico that make it the world's largest silver producer. Silver accounts for around 35% of Fresnillo's overall production. As I write this, the company offers investors a spectacular buying opportunity. That was 4 years ago. The shares fell sharply in 2019 when the company reported that projects to boost production at 2 of its 7 mines were taking forever. As a result, production fell, and the stock fell more, 30%. This massive divergence moved the stock from one of the largest capitalized mines to a mid-cap with a valuation of about $6 billion. Anyway, that's Fresnillo. Nova Gold, junior miners, Nova Gold is a good one, still is. I'll talk about these. I've done it before, but I'll do it again. Gabriel Resources. You got to like that name, Gabriel. Endeavor Mining is a medium one. Junior is International Tower Hills. This is one of the most leveraged gold mining companies around. A lot of experience. Leverage is enormous. Wow, when he wrote this, he said if gold goes to 2,500 an ounce, it's already at 3,000. The potential gain in International Tower Hills would be between 25 and 50x. So I'll look that up. The symbol is THM, Tower Hills Mining, THM. Anyway, Narad, I'll try to find there is a gold company I like. Maybe I can get the CEO on. Unless I'm too doom and gloom. Unless I'm too Debbie Downer. All right, here's silver gold stocks. Frankie's the best. Yeah, Newmont's, you got to have Newmont. You have to have Barrick Gold. PASS. I'm having a hard time with that symbol. Let me look. PAAS. Oh, yeah, Pan American Silver is great. That's the one I was trying to think of, Pan American Silver. I didn't know that symbol, so it shows how clever I am. But yeah, Pan American Silver is an excellent company. They're all going up, unfortunately. But that's life. Fortuna Mining is good too, 558. I don't know BVN. Oh, Campania de Minas Buenas. Let me see the full name. I might know these principals, Frankie. Let me see. Not me personally, but my associate. Buenaventura, yeah, that's a great one. I know Buenaventura is a good one. Excellent, excellent. I know the top people, not personally. Wow, it's running. It's gone from 12 to 14. It's still down from its highs. From a guy I've worked with for years, he's very close to them. Those are all great names. I like them all. Hecla's a good one. Hecla has exposure to silver too, as you point out. I already talked about AG. My brain isn't working. Yeah, I like this Highcraft Mining holding. I like that. I don't know this other one, I don't think. Royal Gold. I don't know Royal Gold. So Frankie's got some good names there. The only thing I worry about, they'll issue it through the paper market. Yes, that's what they've done. That's why the opportunity is there. And China has set up the Shanghai exchange. I bet Moscow has one, and I think Dubai has an exchange, but I think there's another one being set up. Anyway, the Shanghai is all you need. They are doing it. They're doing a paper. They're doing a physical exchange. They're not cowboys like ours. So the gold is moving there. But yes, they will manipulate it until they can't. And I tried to separate it out. I think they're going to be able to continue manipulating gold until it's repriced. But it doesn't mean gold won't go up. Just because there's so much, they control it. You know, all you need is Trump to call, I don't know, Czechoslovakia and say, we need your gold, and otherwise we're going to raise our tariffs. They can move the gold around. Silver, I don't think they have that anymore. That's why I'm focused so much on silver. But yes, it's all manipulated, but it costs money. It costs money. And as these positions go against the bullion banks, they're not, these paper positions are not done in Cayman Islands or from you know, a park in New York City, or the credit that's extended to the bullion banks to establish these short positions, to these 26 or so men, they know about it. So, and there is settlement. The risk is, to me, is that they'll have settlement in cash when it gets in trouble. Yeah, there's plenty of risk, and the government's not going to go down without a fight. But the risk works both ways, because buying comes in, and right now in gold, the buying's coming in, and they're taking the physical. And that's why you're seeing the gold fly over the ocean. The markets are under stress. They're under stress. Can you ask Ham? Ham had a call without me, so you have to go to X, and there should be a recording of the call. He's not coming on today. Can you ask him if that FingerMotion state, is that going to be a private deal or will buy on open market? Can you ask him if that FingerMotion state, is that going to be a private deal or will buy an open market? I have no idea. No idea. I have no idea. The things I hear, but it's all rumors, so I can't confirm it. Somebody's buying in the open market, and somebody else might, maybe you mean stake. Maybe you mean stake. Somebody might be buying a stake, and that might be in the open market. I asked that question, why don't they just give the money? But I don't know. I don't know. I have no information. I can ask Cam, sure. Comics was trending and rumors of massive delivery. They'll hold it down, Giuseppe. Don't hurry for it to break out. I hope they hold it down for another 5 months, because we want the time to buy the position. Once it breaks out, you'll never see it down here. So good on them for holding it down. I say that because I'd like to own some silver. Yes, I would buy in gold and silver companies. There aren't many silver companies. Frankie listed some. Bob, having said that, we all tend to go, I do it too. We tend to go, like I just brought up this one that could go 25, 50x. And wow, that's great. But your first move in miners, should be to establish some position in the big names. There's plenty of movement left in the Barrick Golds, the Newmonts, the Agnico Golds, the Franco-Nevada, the Wheaton Precious Metals, the Aramis Gold, those kind of companies. And you can buy ETFs. I'm not saying don't buy them. If you want to buy a mutual fund, there used to be one called the it was run by John Hathaway. He might be gone. I used to get people in it, the Freedom Gold Fund. I'll have to look it up. He doesn't manage it anymore. But anyway, you can buy into these pools. But these big stocks, let me go through a couple. GLD. Now, let me go to GO. Gold is the symbol. I don't know why I'm not. I don't know why I'm not. Everything I touch is going to the wrong. Yeah, Harmony Gold's good at 12. Highcroft Mining 280. Newmont Gold's 45. Man, these things are going. Royal Gold 153. Anglo Gold 32. Gold Fields is good. What's this one? Centerra. I don't know anything about. $5. Core Mining. Sandstone Gold. Franco-Nevada. There's going to be all sorts of mergers. And here's Alamis Gold, $25. I started telling you guys it was so much lower. I can't remember. Have to look it up. Guys, money has just been away from this market. It's starting to come back in. But anyway, I'm too hungry and too worn out to look up things. But you should have a position in the big names. Look at this, the GDX. The GDX has 45 gold stocks in it. But, 3 years ago, 4 years ago, the three biggest, Newmont Gold Corp, Barrick, and Franco-Nevada. If everybody's going to be putting money in here, that gives you play to go to. I'll try to give some price targets, Bob. But yes, I would buy those. I would definitely buy mining companies, definitely. But I'd also try to have a physical look, it's gonna come when if silver goes to 200, I'm gonna stop suggesting you buy it. It might make sense to buy it, but I'd rather buy the mining companies then. That's the cycle in all of these, oil and gas, mining. When there's no money, I can go in and sit with the CEO and he needs money or she needs money. I can raise it directly and strike a hell of a deal. But then as money comes in, those deals go away. I can even go in JV. But then as those deals go away, there might be a middleman in between. I still can get into a deal that's attractive, but you're paying somebody else that put it together. And then it goes to the stocks. And once the physical opportunities, the lower, it's just like real estate, I guess. If there's a war in Beirut, you might be able to go buy properties in Beirut inexpensively. But once the peace comes back, uh, it's harder and harder to buy those properties at any discount. So you turn to products, like somebody sells you the Lebanese rental property income fund, or everything goes through a cycle. Do I think CAUD is done? I have no idea. I have no idea. I'm stubborn in my view that Aubrey advisors should be kicked off the board. Somebody came here and said that they own a huge percentage of the company. I haven't been able to confirm that. And there's an ATM with, I think, Aubrey outstanding. So I just think as long as they're involved with Aubrey, it's problematic. On the other hand, it's their only source of capital right now. So those are my negatives. The positives are, and it's trading on the expert exchange. Positives are, I think Peter Boards is putting together a lot of good companies, good team, great team. And I think to the extent that he has to go to the pimp for money or drugs, he's only taking a little bit, and he might be sort of weaning himself off that addiction. And it doesn't take much. You put enough revenue together, you put enough teams together, and all of a sudden the company's growing its revenue, and it doesn't matter what Polar and Aubrey do to the company. So, and if now the head of Aubrey owns a huge part of it, he's going to stop working against it. But remember, Aubrey Advisors, Polar, Chadron, and one other hedge fund went on a 2.5-year mission to steal money, in my opinion. But no, I haven't given up. I don't. In fact, if I suddenly had money, I probably would just go ahead and see if I could buy some, double or triple my position, and see what happens. I have a good friend that thinks collective audience could be back to 30, 40 cents as soon as it stops trading on the expert market. I'm not going to read that out loud. I think it'd get me in trouble. But I think there's one nation who's just got a mendacity around the world regarding war. And according to Putin, the United States was running bioweapon labs in the Ukraine. It wouldn't surprise me if we were running bioweapon labs, as you suggest. But I don't know. None of us know for sure. All right, I'm gonna let it go at that. I guess maybe for Finger, I don't know how to know when Ham does a call. He usually lets me know, but he didn't let me know today. So he's not feeling very well, so you got to cut him some slack. But for Finger, try to look on Twitter, and maybe there's a recording of that call. I don't know if I was helpful in anything else. the most urgent stories out there, doesn't mean it's going to work, but I think might be NIXX, NIXX. My eyesight's so bad I can't. Yeah, 189, and then Railtown is 27 cents. So I'm going to leave it there. I'm going to say good night. We'll see you Monday.